Crypto market sentiment seems to be improving as news flow shows more scope for institutional adoption. ETH continues to eke out some outperformance ahead of the merge, and Ethereum Bitcoin vol spreads are trading at extremes as the event approaches and markets speculate on a sell the fact outcome as puts on Ethereum hold a relative bid. All this and more in this week's Crypto Insight. Okay, crypto this week. Bitcoin sentiment seems to be turning a bit. Risk assets held their ground. A strong non-farms print last week, better ISM data. Crypto markets managed to stay firm. We did get some crypto-specific news. So you had Blackrock partnering with Coinbase to offer crypto market access to institutional investors. You had Meta rolling out an NFT platform, integrating that into Instagram, etc. So that kind of helps spur positive sentiment in the space, right? So you know that's first bit of good news I think we've seen in crypto quite a long time, and may lead to more adoption and more interest going forward. Basically, right? That's how it's been taken. Now, if we look at the technicals, though, we're still waiting for a break above this kind of 25k area. We've got this ascending channel. We've managed to kind of hold from the middle of that range, but we still haven't broken the top side of it, which is now around 25k. If that was to break, we'd be looking at a test of 28k as the first major resistance. And then the next one's going to be something like 32, 33k, right? But I think we're a ways from that. We kind of need to see how stocks digest the CPI data this week. If stocks, I think you'd need to see S&P through 4,200 in a meaningful way to see Bitcoin break 25k. That's the sense that I get from the way these things are trading and the way these things are correlated right now. Okay. All right, then if we look at Ethereum, which is kind of where the action is, you've got a few things going on. So you've been eking out your outperformance. Okay, so it hasn't been so violent, but it's moving in the right direction, right? So Ethereum's still trading quite strong, I would say. Looking at the ETH Bitcoin spread, you know, we've been working our way up towards this big sort of level at 0.077. Obviously, if that was to get taken out, then that next leg higher can happen to what I've called the blue sky target, right? Which would basically take, you know, Ethereum, call it another 20% up from here relative to Bitcoin. Okay, that's really what I'm looking at as a bit of a blue sky target. Now, you know, what's leading to this kind of outperformance? Well, we've got the final testnet merge happening this week. If that goes through without a glitch, then market's going to probably take that as, you'd almost think of it as you know, just working your way up the ladder and you're just going one more step closer to the ultimate kind of destination, right? So you need that to happen. You need it to happen successfully. Now, this chart kind of shows Ethereum active addresses seem to be spiking a bit, which is generally a good thing, right, for crypto. And then you had that guy, Arthur Hayes, who's quite well followed, put out an article explaining why he's all in on Ethereum between now and March 23 as his kind of timeline. And literally, he's basically saying two forces: the Fed pivot that is going to be there by March, and the Ethereum merge, right? And that's going to take so much supply out of the game that you're going to see Ethereum re-rate higher, right? And he's done various scenario analysis and probability weightings, and he's coming up with a target of 2,800 for Ethereum by March 23. I have no idea how good this guy is at predicting, forecasting any of that, but that's basically what's out there, and that's probably providing a little bit of optimism, basically. Yeah. If you look at open interest, we mentioned last week that options open interest has gone through the roof. Ethereum relative to Bitcoin. So it's gone through one, i.e. more open interest on Ethereum than Bitcoin, and it went to like 1.25. So it's 25% more open interest in Ethereum options than there is on Bitcoin options, which is rare. I don't think it's ever happened. But then you look at the same metric on futures, open interest has gone nowhere, right? So that explains, and I kind of flagged this, that the open interest in options is a bit flattering to Ethereum, because what's driving that is this explosion in call flies that are trading in March and DEC expiries where the whole world just wants to like do these low premium call flies that make 10, 20, 30 to 1 if we go up there. That just seems to be the trade of choice, right? Some big funds or instos are basically getting involved in spending your amount of premium on those type of bets. We'll see if that ends up being a great trade. Personally, it's not the way I would do it. Very difficult to monetize those trades. They carry great, but they carry great for a reason, because they're not going to have much explosive upside if we go up there, basically, right? So, you know, I don't really see longer dated flies are so similar to just trading the same amount of delta, in my view, that I don't see a lot of edge in those trades personally, right? So I haven't done a single one of those trades myself. Yeah. If anything, I would do call ladders, just because I think when you get the re-rating and the vol's trading at a premium right now, that vol is going to collapse after you've had your move. And the way to capitalize on spot higher and vol lower is a call ladder or call ratio structure, right? So I do have some December call, full disclosure, I do have some December call ladders in the book. I think they're a much better expression of the trade in my view. Yeah. And then before I hand over to Aaron on Glassnode, I just want to talk about this basis. And this is something that Ivan kindly flagged in the Friday community call. And if we have a look at the kind of implied annual yield in futures on Bitcoin, you can see that over the last month, that's gone from, you know, kind of flat in the 1 month up to like 3%, and generally been kind of trending higher across most tenors. Okay. So there's a positive annualized futures basis, as you would typically see in crypto. Okay. And you're seeing that in Bitcoin as spot has been trading higher. Whereas you look at Ethereum and you're seeing the complete opposite. And you're seeing seeing these things flip negative, basically. So saying that futures are trading at a discount to spot. What is the reason for that? That is because there is more and more opinion that there's a risk of a hard fork here when Ethereum merge happens, right? That there might be a fork where the proof of work miners keep doing their thing, and you end up with two Ethereums. You end up with an Ethereum proof of work, and you end up with the Ethereum that goes proof of stake, basically. Okay. And apparently, when you're long the underlying, when you're long Ethereum and you're short Ethereum futures, what you're going to get is you're going to get access to this airdrop where you're going to get these new proof of work tokens on Ethereum that may be quite valuable, basically, right? So the way you get access to these tokens that are going to get airdropped, you can kind of think of it as a special dividend, basically, right? How do I get access to a dividend in stocks? Well, I have to buy the stock, right? And then maybe I'll sell options against it in a synthetic form so I get access to the dividend. So this is almost like a dividend that you are going to get for holding physical Ethereum. And the futures are now pricing in the potential value of that dividend by trading at a discount, basically, right? And that's what's going on there, right? So whether that's got room to run or not, I don't know. I have no idea how you value this special dividend or what this token is going to be worth. But clearly the miners are like got to be in their bonnet about not losing all their equipment and it basically going to waste, and they want to keep churning out some ETH tokens, and that's what they're going to basically do. Right. It's funny. Arthur Hayes was also flagging that as a reason why he thought the merge was going to be a success and actually happen, because these miners are actually making a big deal out of this. And actually the fact that they're doing this means that they think the merge is going to happen and be a success. Right. And so I found that an interesting piece of signaling there, basically. Right. So that's what we're seeing in the futures basis between Ethereum and Bitcoin and why that's happening. Okay. And then on that point, I'll hand over to Aaron for some on-chain stuff.
This week for on-chain, we're doing double Glassnode again as they dove into both Bitcoin and Ethereum, similar to last week. Basically, we're going to hear some similar things to what you probably a little bit similar to what you heard from Imran, as Glassnode this week dove a bit more into the derivatives markets, options and futures for both Bitcoin and Glassnode to try to determine if this kind of recent price action, mainly in Ethereum, is true kind of fundamental bullishness, or like the title down here says, is it more of a buy the rumor, sell the news, buy the rumor, sell the merge event? And so starting out here, looking in the top left, we're looking at the futures open interest for Bitcoin, in which you could see we've had a pretty significant increase lately since April, breaking through what Glassnode kind of signifies as the baseline around 350,000 Bitcoin. You could see, we do oscillate, but we tend to oscillate right around this red line rather. And so with this new break, we've reached all-time high in terms of Bitcoins in the futures open interest at 538,000. Now, it is important to keep in mind that relative value of this open interest is still pretty low at 12.4 billion, which is similar to the nominal amount that we saw during the June 2021 sell-off, where we went down to 29,000. So while the coins themselves has been increasing, the nominal amount is still pretty low, which we want to keep that in mind in terms of kind of quantifying how much leverage there is in the system. So not as much kind of bullishness in terms of the nominal amount, but the coins is upticking in terms of futures open interest. And so in that same realm, we can move over here to the top right. We're looking at the futures volume in USD. And so what you can see here is a pretty kind of structural decline that's been going on over the last 12 months. This steady lower highs that's dictated by this red line down here. But what you'll see is that since that Luna sell-off, we've really managed to kind of stabilize and appear to be kind of building up a floor at that 33 billion per day. So when you kind of combine these two things, the peak or the spike in open interest and the stabilization of the futures volume, you can kind of take away something that Imran alluded to earlier, is that it would seem that traders, Bitcoin market participants, are getting a little bit more comfortable putting on that Bitcoin price exposure, especially following these two major capitulation events. It says copulation here, even though I changed it. Sorry about that. But basically, people are feeling a little bit more comfortable putting on that Bitcoin price exposure. And then also that's kind of put on, shown by the spike in open interest. And so moving over here to the bottom left, we're basically looking at the percent of these futures open interest that's crypto margined. And so we're kind of doing this as a way to see bullish exuberance. So in the past, for the futures, it was pretty common that you would post your Bitcoin or your Ethereum as your collateral and then buy your futures contract with that as your margin. But that kind of leads to some excess volatility, right? So when your futures contract is going up or down in value, so is your collateral. And that kind of leads to that kind of waterfall of liquidations that we've seen in the past in crypto and Bitcoin. Prices flush down, and then that your collateral flushes down, and then you get liquidated, and it just happens over and over and over again. And that leads to these big drawdowns that we had become accustomed to. And we're seeing that less often now because of this structural change in the percentage of open interest that's crypto margin for futures. And so you can see at the peak in this blue box here, we were around 65 to 70% of all futures being backed margined by crypto, whereas now we've just slowly worked and grinded our way down to where we've hit a pretty good baseline around that 40%, basically meaning that 60% of all futures now posted in stablecoin or fiat is kind of removing that added volatility that we had before when things are margined by the coins themselves. And then lastly here in the bottom right, we're looking at the futures term structure, a little bit similar to what Imran was talking about before, basically showing that we're in that kind of clear state of contango, right? Where people are paying a slight premium to own exposure to Bitcoin out into the future. But even though it is in contango, it's pretty minimal. Going out to year's end, you're only looking at about 3.24%, which if you're doing the cash and carry trade to earn that yield, which is pretty popular in Bitcoin, that's really not that much, especially compared to the yields you can get from US treasuries, kind of showing that there is a lack of long-term true bullish biasness. You do have kind of putting all this together, you do have a little bit more confidence to get that Bitcoin exposure, but it doesn't seem that people are getting overly bullish just yet. So moving on to Ethereum, we're basically going to look at some similar things here. So like Imran noted earlier, the ETH's open interest for options is at an all-time high, well, close to an all-time high, but for the first time ever, higher than Bitcoin. 6.6 billion for Ethereum, only 4.8 billion for Bitcoin. And so in this top chart here on the left, we're basically zooming in on that open interest for September, overlaid with the volatility smile. So ignoring the smile here for a second, you could see these bars in the background. The blue bars are for calls, the purple is for puts, and you could see the calls are just blowing the puts really out of the water. And so you have these big spikes here. You have the big spike here at 2,200, for about 94 million. You have another big spike here at 2,800, so 2,800 at 84 million. And then even going out here to 4,000 on ETH and 5,000 on ETH, you have open interest of 129 million and let's see, 112 million. And so that's really just showing that, you see these bars line up pretty in line with the steepness of the smile, basically showing that people willing to pay up for that premium for the upside calls are really pushing the volatility up. Basically, well, you have these more bullish people willing to pay up to 130% in IV for that upside exposure. And so moving to the right here, you could see we're now moving a little bit into the future. Post-merge, we're looking at the October volatility smile, and you could see the dramatic shift in the shape of the smile. The right tail going almost completely fat, almost all under 110% vol, but the left side staying extremely bid, basically indicating that there is still low demand for the upside calls, but high demand for the downside puts, kind of the opposite of the September, kind of leading you to believe that this maybe isn't so much fundamental bullishness, but people quite literally trying to play the merge price action. And that's kind of supported down here in the bottom left if we look at the exchange net position for Ethereum. And so these red kind of drawdowns are when you see coins leaving the exchanges, which is what tends to happen during bullishness. People are taking their coins off the exchange to go use them however they want, maybe still cold storage, maybe a DeFi, whatever it may be. And you can see right now, the spike's pretty low at 700 million per month. This kind of pales in comparison to the 3 billion we've seen previously, and even pales compared to the 6.6 billion we're seeing in open interest for options. And so this monthly exchange rate, it's really only 2% of all the futures trade volume. And in previous bullish periods, we saw that number get up to 20%, times like April earlier this year and November 2021. Again, pointing to the fact that while there is encouraging price action and people are getting bullish, it does seem like it's happening strictly in the derivatives and not so much at the fundamental spot level. And that's kind of followed up here, once again, looking at the futures term structure. And you can see it looks drastically different compared to Bitcoin. For Bitcoin, you had the contango. Now, ETH futures, you can see clearly in a backwardation. And so it's basically showing that this, they're discounting, the futures participants are discounting the price post-merge, which aligns pretty well with what we were looking at here, where people were paying up a premium for post-merge downside protection. And all in all, it's basically just showing that these market participants are becoming increasingly more sophisticated. They're putting on more sophisticated positions, utilizing the depth of the futures and the options contrast markets as they continue to grow. And with such, that's how they're choosing to get their exposure to the merge price action, rather than a case for more fundamental spot bullishness. And so it does indeed seem to be a buy the rumor, sell the merge event starting to take place. And that is on chain for this week.
Yeah, no, it does seem like most sort of fast money will definitely play it that way, like buy the rumor, sell the fact, or even sell just before the fact, right? We often see that with some of these crypto catalysts. So, but the fact that the date is the 19th of September probably suggests that the next window, the next month, is still probably going to be supported, right, from those front running buying flows or whatever they may be. Okay, I'm going to do the vol now. So you can see on screen, the charts look a bit different to what you're used to, right? So these are like the charts that I'm incorporating into my crypto dashboard, to which do the realized calculations as well. So here we've got Bitcoin and Ethereum realized. Similar sort of story. I've added the 1 week vol, the 30-day vol, the realized 10-day, which, like I said, that's how I calculate carry, averaging those, taking away from the 10-day realized. And then I've actually got the carry number here as well on the right axis, right? So you can see, from a couple of weeks ago where you had everything trading at around 70, you had realized at 70 and implied at 70. The realized has fallen off a cliff, right? So realized has gone down to about 40. And implied kind of hasn't followed suit. So implied sitting there, kind of dipped into the mid 60s, but now it's chilling at about 70 basically, right? Both on the 1 week and the 1 month basis. So your carry is exploded. Your carry is like looking at like 30 vol points right now in Bitcoin, okay? Assuming that we're going to continue realizing 40 vol, if that's what you think, then there's a lot of carry to harvest there. Now, clearly the market doesn't think that. Market thinks there's going to be a move, which is why they're bidding for gamma and they're keeping that front end at 70, because they think it's a bit of an overshoot in the fact that markets stop moving, but we're probably going to move on something like CPI or whatever it may be. Okay, or the next Ethereum move once the merge happens or the testnet merge happens. So the market is anticipating movement. That's why you've got this big spread between implied and realized. You look at Ethereum, it's a similar story. You've actually got realized, down to into the 60s, whereas implieds are like closer to 100. So a lot of juice in there, but clearly there's a lot more event risk here. If I was going to have to fade one of the two, I'd fade Bitcoin all day long. I wouldn't fade Ethereum because the gap risk in Ethereum on some random headline. Like, what if they delay the merge by a month? What's Ethereum going to do? Minimum down 5%, right? Just on sentiment. Who knows what else? Right? It might be worse. Right? I don't know. But that's the idea being that random headlines can drop on Ethereum much easier. Yeah. Then if we move on to kind of what the term structure has been doing, that's the good old trusty GVOL charts. So you can see pretty flat curve, looking at the pink one, pretty flat curve on Bitcoin. If you look at how that evolved over the course of the week, you did have a contango in the curve going into the DOVs on Friday. It's recovered everything after the weekend. That front end's just been bought back as the gamma buyers come back in after the weekend. Basically, it's just a very typical pattern that we see. You look at Ethereum term structure, you're seeing a very big kink here forming in September. It's getting bigger and bigger. You're also getting a bit of a back end bid in the vol just generally, right? So the entire back of the surface is shifting higher, whereas the front end isn't, basically, right? The front end's being used as the funding leg, right? So if you're a buyer of vol, you want to buy vol in September or longer generally, but that still is going to have a theta associated with it on 100 vol. And when the market's realizing 65 or whatever it is, it's quite expensive on Ethereum. You're going to use the front end shorts to finance that. That's why you see the front end weekly stuff absolutely collapse. So I wouldn't be surprised to see the 1 week stuff next Friday get absolutely crushed after CPI, because anyone who's bought a load of Vega into this merge catalyst wants to fund it somehow. They might not want to be short a load of gamma before CPI, but once CPI is out the way and digested, they're probably going to smack the front end to get some carry back and get that theta build down, basically. So that's what I'm seeing in term structure and kind of how I see it going. If we look at skew in general has just been sort of drifting lower. When I say lower, skew for puts has been getting smaller. So if you look over the course of the last sort of, week, Bitcoin in general has been drifting in this direction, which is puts getting cheaper relative to calls, except for the weeklies, which were trading got as far as neutral, but then bounced back. So the whole collection of maturities kind of parked at around 3 or 4 vols for puts over, which is quite flat compared to what we've seen over recent times. Okay, that's for Bitcoin. Now you'd think, you look at Ethereum, it's going to be even less for puts and more for calls, given that the bullish catalyst is on Ethereum. Not so much. So if you look at the skew, you actually see a slight premium in the Ethereum put skew as compared to Bitcoin. Not by much, but just a very tiny amount. And I find that quite interesting. And that's not what I would have expected to see going into the merge. So I don't know if that's going to change as we get much closer to the September date. But even the fact that we've got that now ahead of this testnet merge is surprising me. and it makes me suspect that there's something going on with regards to the market doubting that this move in Ethereum can be sustained after the merge, and thinking that there's a lot more risk of this failing than the market is thinking, and them needing to own the downside, basically, right? So I don't know. I found that pricing really surprising. I would have expected the skew to go, pretty bid for calls, and it's just not happening right now. Yeah, so pretty important, I think that is, and let's keep an eye on that over coming weeks to see if that changes. And then the kind of last thing that not the last thing, but the thing we need to look at is relative value. So again, some more charts that I'm going to be throwing into the Vol dashboard that you get on Fridays on crypto. And this is the relative value stuff, right? So this kind of top chart here shows us the Ethereum Bitcoin vol spread and where that's trading across different maturities. So you can see the green line is kind of today's, is the term structure of that spread, of that differential between Bitcoin vol and Ethereum vol. Ethereum is over, obviously. So you can see that's at around 30 vols across most maturities, with the 2 month having the highest premium, which is no surprise. That's like your kind of September, October area. And that, you know, a month ago, that was like 15 vols in the weeklies versus 20 vols in the back. So they've generally been getting higher and higher as we've been going through time. And you can see in a percentile basis, this is from GVol, the percentile distribution. So you've got, you know, these kind of bars that show you the percentile, and the dotted line kind of shows you all the different maturities. And we're trading very rich in terms of the range of that spread, basically, okay? So no major surprise that we're trading rich, because there's a reason to trade rich. If you look at this chart at the bottom, this looks at a 6 month history, shows that spread on the 1 week, the 1 month, and 3 month maturity, shows how that's evolved through time. And in the black sort of shadow, that's kind of showing us the 10-day realized spread. So you can see that, you know, over the last month, the 10-day realized spread has actually been above 50 vols at some point, which has made, you know, owning this stuff at 20 or 30 has been a dream. If you own Ethereum Gamma and you sell Bitcoin Gamma, it realizes 50, but you own it at 20, you've been picking up money, basically, right? Now, lately, that realized differential has collapsed a bit to be more in line with what's implied right now at around 30, 25, 30. So it's kind of justifying the current implied levels, but you're kind of breaking even if you've got that gamma spread right now, basically. Yeah. And then I've also plotted, like we mentioned, the skew. I plotted the 3 month part of the curve here, and it just shows you that, you know, where that spread has typically lived. So this plots the Bitcoin 3 month skew and the Ethereum 3 month skew in the green and the yellow lines, and it just kind of, the spread is the red bar. So you can see that, you know, when we were selling off in kind of June, July, and the market was, you know, really struggling with all the liquidations, you had a premium for skew on Ethereum, right? You're trading, you know, 5, 10 vols over in the 3 month part of the curve. Okay. Then when we had this re-rating higher in Ethereum as the merge date came out, it flipped the other way. Ethereum skew flipped to the point where it was 15 points under Bitcoin skew. So it shows you that we flipped towards calls on Ethereum, whereas Bitcoin still was holding a skew for the puts. And then that entire premium has dissipated over the last sort of month, right? Where we've actually popped our head back up to a positive bar with Ethereum 3 month skew for puts trading above Bitcoin 3 month skew for puts, which, like I say, is pretty staggering, given we are potentially facing a bullish catalyst here, or so the market would have you believe. The skew is not telling the same story, right? So super interesting there. And then the last chart, obviously, as always, is crypto flows. So what have market participants been up to in options lately? So we've got this here, you know, delta neutral buyers. Well, generally call. You can see calls both in Ethereum and Bitcoin, right? These large pink kind of parts of the donut show you that it's all calls dominating the flows. Okay, so that's the same story as that we had last week. If we look at the specifics in Bitcoin, we've seen sellers at the front, right? So again, people selling that gamma, either via 12th of August, kind of local, more at the money stuff, or put spreads being sold. The 2018K put spread in 26th of August got sold in a reasonable clip as well. So there's the gamma selling in the front end, whereas what they're buying is delta neutral September 28K calls and March 23, March 23, 36K calls. But they're doing that delta neutral, which I found interesting, right? So they're doing it to buy the Vega, because that Vega's got beaten up. And, you know, we're seeing those things blocking, but with delta hedges, which you don't always see, right? So that's basically Vega dip buyers basically coming in for Bitcoin and using the front end gamma to finance it. So calendar buyers effectively. If we then look at Ethereum, short dated calls and call spreads in August being bought. So the 20K call, not 20K, 2000 calls, the 2300, 2800 call spreads. So that's this action that we're seeing in the 26th of August, we are seeing some sellers of September call spreads. So the 3,000, 3,500 call spread getting sold in September. That looks like a vol play. People saying, well, that vol's pumped in September. How can I extract some premium out of it and have a bit of comfort that we're not going to break 3,000 by then? So that's the premium that I'll go after. And then you've got these monstrous bars with the March 23 deck call flies, calls being rolled as well. So some December calls in 3,000 getting rolled into March 3,500 calls, and then call flies trading in monster size on the 35, 45, 55 strikes and things like that, basically, right? So monster volume trading, but again, the actual Greeks on that are not enormous when you're doing it via flies, basically. Yeah. Okay, and that's kind of it from me. That's the crypto vol summary. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.